Hello, everybody. Welcome to CAPIS's research call this month. I'm Ed O'Dow with Capital Institutional Services. Great to have you here in this July monthly research briefing. Today, we're joined with Markets Policy Partners, a regular contributor as part of our monthly research call, and we're happy to have them. And we welcome our clients and any new clients and friends that are joining us this month for the first time. This is part of a series that we have every month, trying to bring individual or kind of independent content, different research ideas to our clients to help them with their investment making decisions. So it's great to have everybody here today. I know some of you are joining us from vacation. I appreciate you logging in. It's that time of year. So great to have you here, Brendan. How are you doing?
Excellent. Yep.
Good to have you
Enjoying
here.
the summer. Just watching a little British Open.
Good. Nice. Brendan Walsh here from Markets Policy Partners, and we're also joined with John Fagan. John, how are you?
Yeah, doing all right. Hanging in there.
Good. Good to hear. Good to hear. We enjoyed our conversation before the call, discussed some of our vacationing things that we're doing this summer, and it was great to catch up with these guys. And I'm really looking forward to getting their take. Markets Policy Partners looks at kind of macroeconomic policy. They look at what's going on in Washington, D.C., having been insiders in the Beltway for a number of years, and they kind of look at the intersection of politics and policy and macroeconomics. So there's a lot going on right now, so I'll let these guys take it away from here.
Yeah, thanks, Ed. A lot going on is an understatement. My gosh, it has been a really consequential and unprecedented and bizarre, let's face it, number of weeks, about 3 weeks to a month here, where things have changed enormously. So let's start with the elephant in the room, which is politics. Obviously, we're in a situation where developments have put former President Trump very firmly into the lead in people's in all the betting markets, and people's estimation for his chances of reelection have obviously gone from sort of something close to a coin flip to very much the odds-on favorite here, and that's different than where we were before Biden's performance in the debate. We thought that Biden would have enough wherewithal to squeak by in November, basically given the given the groundswell of support in certain areas for abortion rights and so forth, some of these other key issues that would break his way, the economy being relatively steady, and if he does well enough to allay fears on the age front. Well, but we conceded that it was going to be a pretty close call. Well, the age front obviously has put President Biden into an electoral abyss that there appears to be no escape from. And the latest reporting, which you've probably all heard, is DC Beltway insiders are saying that he is going to announce that he's dropping out of the race as early as this weekend. We shall see. We certainly haven't gotten any independent confirmation from that. But the latest development, when it rains it pours. Right now, they got 4 guys got COVID, so it really has not been Joe Biden's month here, and so we're now expecting that the DC insider chatter is correct, and the question really is then what's the process? The idea is that it's just much more seamlessly a transition if it goes to Kamala Harris. That's certainly where the betting odds have gone, and that's where we agree, the Democrats, to try to do the heavy lifting that would end run around a Kamala Harris at the top of the ticket if Joe Biden drops out. It's going to be extremely daunting. Not only the questions about the money, we've heard that there is a path forward of getting the money out of a Biden-Harris campaign to an alternate. People talking about Gretchen Whitmer, the governor of Michigan, and Shapiro, the governor of Pennsylvania, on a ticket. These sort of dream team tickets that are very much conceptual rather than concrete. There may be a way to move that money over, but in the current circumstances, the Democrats are probably going to be trying to do this under enormous duress and with a lot of internal dissension within the party. And if in fact President Biden does step down from the campaign as early as this weekend, then we think the path of least resistance is what they're going to take, and we think that goes to Kamala Harris, reporting that the vice president in that case. I don't know, Brendan, if you've heard anything different, but the name that floated up was Roy Cooper, the governor of North Carolina.
Yep.
And that kind of ticket is not going to, at least not upon announcement, going to garner a splashy enough and attractive enough at least at this point, attractive enough position to really flip the odds. The assumption is probably going to be, unless proven otherwise, that this is a sacrificial ticket, and the Democrats are going to circle around trying to preserve their majority in the Senate and try to take the House back. And
but it is important to keep in mind the Electoral College is a constitutional thing. The Republican and Democratic nominee is a party thing, so you can change the rules as you want. The delegates could hold a convention and choose somebody else. So really anything is on the table. The path of least resistance is Kamala, especially with the money issue. But it's not a constitutional thing. They can really do whatever they want.
Yeah, it'll certainly be interesting to see if there is, they've floated the idea of like a mini primary, and that would be, I think that's a defensible process, but it's also, that's going to create some bad feelings within the party at a time when
you're going to say bad things about each other.
Yeah, it's not going to be taken particularly well by some very important demographics in the Democratic Party if Kamala Harris is not the next in line. So, the expectation that we have is that it will be that obviously it's a very fluid situation, but that President Biden steps aside from the campaign this weekend, as early as this weekend. It goes to Harris. They have enough time into the convention to try to circle the wagons and create some buzz and momentum. There are some. If in fact sort of the generic Democrat could beat former President Trump before, that's not we're in a very different political landscape post the attempted assassination and so forth. I guess there are enormous uncertainties around it, but if I were running the Trump campaign or in the Trump campaign, the only thing that would really be making me nervous at this point, other than the pick of JD Vance, I think that's not that's sort of a pick that shows just how confident he has now become. That's not a shore up some wavering voters kind of pick. That's a double down on MAGA pick. Whereas like Marco Rubio would be able to capitalize on some of the progress that former President Trump had been making with Latino voters potentially, and peeling those away from the Biden-Harris ticket was something that was terrifying to the Democratic pollsters. But the choice of JD Vance is definitely a double down, sort of born of confidence. And this is still July. There's a lot of time, so you don't want to peak too early in the campaign. And just an enormous amount of weird stuff has happened, right? So we joke that every single day seems to be like the least weird day of the rest of our lives, based on everything that's happening. So if I were in the Trump campaign, I would be desperately trying to guard against hubris, but that's going to be pretty hard to do, and try to focus on some of the tamping down some of the negatives that the Vance pick at vice president would bring, particularly his positions, extreme position on abortion and so forth, some of those divisive topics. And he also has like an enormous amount of, stuff that he said in the past. I mean, the guy has been pretty voluble, and and some of this stuff is gonna start popping out. So we'll see. But again, peaking in July, that's not when you want to peak. You want to peak in September, October. So there's a lot of time for it. But the markets are clearly pricing in a Trump win. We've seen this this hydraulic in dynamic in the equity market, out of tech and into sort of, the Russell 2000 small caps, real economy stuff. And that's obviously a very, I think that's a very sensible kind of approach. And, can the markets make broad headway with less tech leadership? Well, our expectation is that this sort of rotational dynamic is more of a, more tactical than structural, and is a process that has an end point rather than a extended, wilderness, tech stocks wandering the wilderness and not being able to find their footing. We think that there is going to be a bid for tech stocks, maybe, not exactly right here, but this is rotational rather than a true change in trend. And after the divot, we think that tech stock can continue to go up. Equities obviously are going to be fixated on this tax cut, a Trump presidency 2.0. Really, when you look, his signature policy win in his first term was those tax cuts. He's going to extend those and talking about doing more. They're throwing, as the Trump administration did, as the Trump campaigns have done, they throw a lot out there against the wall, and not necessarily all of it is meant, quite seriously or literally, or, there are a lot of trial balloons and spaghetti thrown against the wall, whatever metaphor you want to use. But, to take the likeliest elements, a Trump win almost certainly will mean tax cuts. That's something that is, clearly the equity market's taking to the bank. The issue that we see is not so much the equity markets, it's more the treasury market. So we're certainly not alone. We've been banging this drum for a while. I think we talked about it maybe even on the last call we did with CAPIS. But the inflationary nature of the Trump, a Trump 2.0 economic platform, tax cuts. You've also got a weak dollar, essentially like a weak dollar policy, which would tend to push up, oil and gas prices, despite, supply that the Trump administration would be trying to goose. You've got the immigration policies and potential deportations, which, are all else being equal. You may agree with the policy, but it's inflationary, and tends to, would tend to push up wages and tend to tighten labor markets. You got obviously the tariffs, even if they don't do, the most extreme sort of tariff proposals that have come out of the campaign. The expectation is that Trump loves putting on tariffs, and so putting those tariffs on, and last but not least, very much a firmer hand with the Fed. Some would say a whip hand with the Fed, trying to steer Fed Chair Powell's policy in an easier direction, maybe easier, all else being equal, than the Fed would do otherwise. We saw, a lot of chatter about that back in 2019. Certainly the Democrats in Washington, D.C. thought that the Fed was dancing, not dancing to the tune of the Trump administration, but cutting faster than they otherwise would have, because Trump was breathing down their necks. He certainly won't be shyer this time. And so you throw that all together, and certainly looks like a major steepener trade in the treasury market, and the potential for the back end, if the back end gets more concerned than it is right now about inflation, about the potential for economic overheating, the potential for further fiscal deterioration. We don't think that there's really a credible pay fors in the Trump economic plan right now. The idea that he's going to cut Social Security and Medicare, we just don't think so. And so there's, when we look at the a risk factor that's a clear and present danger among a lot of the positives that a Trump administration would bring to sort of market sentiment in general, that's definitely the one that we circle. We think that treasury volatility is going to go up under a Trump 2.0, and we think that inflation, that comeback of inflation, is a risk. One of the guys, I guess, Bessent, one of the names that's floated for Treasury Secretary, was quoted as saying that it's absurd, quote unquote, absurd, to say that the policies of the Trump administration are inflationary. Notice that he didn't actually like refute any of them substantively, and just said it was absurd that someone could think that. That's definitely what you'd say if you don't have a good argument the other way. So if anybody does have a really good argument, the only argument I heard this within the sort of beltway chatter, was that lower taxes are disinflationary because it allows companies to lower prices without thinning their margins. That's not how companies work, but that's what somebody told me. So I think that, you know, we're in a situation where we're definitely watching that back end of the Treasury, the longer duration. They're behaving really well right now, despite we saw, you know, after the debate, the long end was really taking a beating, but you know, the lower inflation numbers and some of the growth disappointments, and the Fed, you know, pretty seemingly on track for a September rate cut, have calmed the back end down. But that's definitely one to watch. Overseas, obviously, the Trump administration is a clear and present danger to, you know, trading partner equities in, you know, you name it, Japan, Korea, China, you know, European automakers, all that stuff that in the past has had real trouble digesting the threats and bluster, and sometimes, you know, the actual application of tariffs. You know, weak dollar policy is something that's easy to say, but it's hard to implement. You know, how do you actually, you know, back that up with anything other than rhetoric? You know, I guess one way would be to bully the Fed into, you know, more rate cuts than they would do otherwise. And, you know, that's certainly possible. Let's see. Just to go through a couple of other issues, you know, we think that you know, China, we've been, you know, our skeptical call on the Chinese rally has, I think, borne out here. A lot of that has been given back. We think that China remains dead money. We think that the, sort of some headlines about President Xi's health coming out of the third, or like, you know, rumors and that sort of stuff about his health coming out around the third plenum, the lack of real clear, you know, stimulative policies, the disappointments in credit extension, the disappointments in, you know, in various elements, the pivot to an industrial strategy of growth seems to be waving the white flag on trying to pivot to consumers, because that obviously hasn't worked. You know, if you're pivoting to industrial-led growth model, that seems to be just born of desperation, right? There's just no other good options because you cross off, you know, property, that ain't happening. If you cross off the consumer, and so what are you left with? It's like industrial and trade. So I guess they're going back to the well on that at a time when Chinese overcapacity is getting a lot of, you know, clear blowback in the West. Let's see. Other stuff, Brendan, what else are we kicking around?
I talked about the Fed.
Oh yeah, that's right. I almost forgot.
I know.
We did mention the Fed in reference to you know, the sort of the political atmosphere. A politicized Fed, you know, it's, you know, name your institution in Washington that that is, you know, purportedly independent but is getting dragged into the swamp. We think that certainly you know, would be that would be a dynamic that that a second Trump administration would achieve. But our longstanding call for the Fed has been a July rate cut. That was like at the end of we put that call in place at the end of last year. It was wildly more hawkish than where market consensus was. Market consensus has shifted enormously, and now it's slightly more dovish. We think that the Fed, you know, we don't disagree. We're going to stick with our base case because we think they should cut in July more than we think they will. They'll probably, you know, they'll probably sit on their hands for another meeting, but they're for no reason. I mean, if you're looking at the implied odds of futures, if you have like a 5% chance of a cut in July and like 100% chance of a cut in September, that just, you know, I don't think that reflects well on Fed decision making. It shouldn't be that stark, right? And they're just waiting, it seems, for the sake of waiting. They've got ample, you know, justification to start cutting in the way that the European central bank started cutting, which is, you know, here's a first rate cut, which is modulation, right? You know, we've made a lot of progress. So, you know, one rate cut doesn't mean we're cutting at every meeting and it's a huge rate cut. We're going to do this one thing at a time. That hawkish first cut, you know, that's a completely defensible policy approach, but the Fed has just declined to do it for whatever reason. I can't imagine why, but I guess they're just
also,
so
if you want to
freaked
take
out.
politics out of it, it makes sense to do it in July. It's the middle of summer, people are either on vacation or you're kind of focusing on the Republican and Democratic National Convention. So there's other things. So if you knew you were doing it in September, why make yourself part of the campaign? Just do it in July, and then all the other meetings are after the election, so you don't have to worry about it.
It seems stubborn and suboptimal.
Yeah,
but the Powell Fed has been obviously very they got burned by inflation. So I mean, I guess you can justify it by surplus of caution, but it seems a little silly. In terms of global central banks, we don't think that the Bank of Japan, there was a sense that they might have to start raising interest rates to defend the yen. Our view has always been that they would get that sort of first, get to zero and then just sit tight and let the Fed's, cuts come into focus, let that calm down the dollar yen pair. Seems to be happening, so they don't have to intervene and they don't have to hike rates. We think the ECB is, on a schedule of gradual. They don't have a big they don't have the kind of stagflationary problem that you see in the UK. We think that the Bank of England is the last to cut because of the stagflationary issues they have there. And we think they follow the Fed rather than front run. And we're sticking with the Fed in July. We think they should, but they'll probably just signal that it's coming in September and waste another 5 or 6 weeks.
And then what would you think in September? I know like back in January or April, you guys were thinking July would be the one and done and maybe even 75 basis points. So if you think it is in September, probably not 75.
I think that if they drag it out and wait till September, I think that the chances if they do July, I think that they can then, I think there's a decent chance that they end up doing 75 this year, whether they go in July or September. So if they start in July, they can skip a meeting, right? You can skip a meeting in November, when everybody's, hair on fire because of politics, or, you can skip September and show, look, see, we're not going, it's not automatic, right?
Mm-hmm.
But if they start in September, our expectation is that by then, growth is going to be, there are going to be much more signs that the consumer is pretty tired and getting a little wearier here. Those are going to be more signs that the labor market's turned, and we think that the justification will be September, November, December. They do 3 cuts. So we've been at 75 basis point cuts. So we're sticking with 75 basis points, and we don't think that really is dependent on when they start.
Okay.
Based on versus, July versus September.
Got it. Okay.
Let's see. Other questions. Let's see.
the big stuff.
Yeah. Any maybe kick to Q&A while we still have some.
I don't see much Q&A going on right now. Can you tell us anything for those of us not as informed? Getting back to that Roy Cooper, again, it's all speculation at this point. I get it. And I get it that it's speculation on Biden potentially stepping down. I mean, things seem to change depending on when I turn on
a week and a half ago, there was just more, chatter about it. And people that, don't just gossip. I think this one is actually real, that he's realized it's time to, and I also think it's based on reality, getting old's hard, and it doesn't, go in a linear fashion. Sometimes it accelerates.
No, definitely not.
Yeah, that's just the fact of it, right? I mean, there are all these stories coming out. Oh, the campaign, they hid his deterioration. Things happen fast when you're in your 80s.
Yeah.
Right. And look at that pressure the guy's been under. I mean, like, his son got convicted, and he's obviously, this is big pressure. He's got personal pressure, he's got professional pressure. This is a very difficult circumstance for anybody. And if you're not in great health, I mean, I wouldn't want to be doing that at 81.
the photos of Clinton, Bush, and Obama, these guys were in their early 40s when they start. And at the end of their first term, they all had white hair. Imagine if you started at 77,
And like you said, it happens in a nonlinear fashion. It kind of compounds, whether, there's dementia potentially at play here. When you look back at
the
campaigning,
Parkinson thing, I think is potentially real also.
I've also heard that. Absolutely. Absolutely. You look at video of Joe Biden in 2020 leading up to the November 20 election, and you look at video now, and it's like, wow, that 4-year
He
difference.
didn't look 77 back then, and he looks older than 81 now. Yeah.
But he sounded so much different 4 years ago.
Sound of voice too. I agree.
Yeah, it's pretty stark. It happened all of a sudden. We don't see too much in the way of questions here. I think you guys kind of nailed it, though. I think with hitting what people's concerns are. Everyone's thinking about this election, what it means. John, you made a good point about what does it look like if it's Trump getting elected in this November. How heavier of a hand does he play on the Fed with Powell? Does he feel more pressure to start dropping rates? Yeah, I mean, those are things we're gonna have to wait and see, but it's definitely.
I would also say if Biden does drop out, don't get too caught up in the initial polls of Kamala's running here and whoever is running there. Polls are pretty crappy, and it's going to take a little while to settle down to get kind of good data on that front. So I wouldn't overreact to whoever is the new Democratic announcement of whether that's good or bad.
Mm-hmm. Do you guys have any just looking at you made the point earlier about the likelihood of Trump winning, maybe a little bit of a rotation out of big tech into kind of Russell 2000 names. Do you have any look or view on equities? When is it going to get a little tired here? We had that correction first half of 2022. Since then, we've been on a straight bull again. It's like, is there any view or idea, or is it just a guess at this point? When do we take a breather, like more of a real breather, more than just a few down days? But when do we kind of get into corrective territory again? Is it if it's a Trump presidency and that's bullish for equities, do we run up in equities going into that election and even post-election? And then come Q1 2025, once we've digested it, we know it's real. Do we then say we need to take a break from equities? And then
it could be the opposite of the last time, because Trump's presidency took everyone by such surprise you didn't really process what it meant, and then you got a rally. This time, I think you get the rally into the election, and then you don't necessarily have to have a huge sell-off, but I think a lot is going to be priced in by then.
Yeah, and I think, and going back to what we said before, essentially, a lot of this is going to be the policy, how Trump 2.0 policy mix meets the macro backdrop, right? Now, if we're going into a much more, significant slowdown in the U.S. economy than we expect, we don't expect there to be, we expect there to be a slowdown, but we're not predicting a recession. But, if there is a recession, honestly, that might be better for the Trump for an incoming Trump administration, right? You can blame it on Biden, and your stimulative policies will be less inflationary, all else being equal, because growth will be a lot slower. Those policies will be welcomed. The pressure on the Fed will seem more appropriate, right? Now, if there's a no landing scenario and you kind of get, the economy kind of on a glide path, and, it's less need for stimulus, but an incoming Trump administration does stimulus anyway and is hounding that Fed for rate cuts, and either the Fed delivers or maybe you get Powell replaced, something like that. That, I think, is, goes back to that's winning too much, right? And then you get the overheating risk. I think that the Trump administration is all gas, no brakes, as the kids say these days, right? And so if you have a slowdown in the macro backdrop that makes application of accelerants and stimulus more appropriate into the policy mix, then that's going to work a whole lot better than a relatively robust economy getting a shot of additional adrenaline it doesn't need, plus other inflationary policies on the top of it. When we look at we think that obviously the run up into the election and then, the sell off afterwards is kind of the classic motif. But as we look kind of peer further into, the first year of the Trump administration, we think a lot of it is going to hinge on, how does the back end of the Treasury, how do longer duration Treasuries behave, right?
Yeah.
If the 10-year hits 5% and starts marching northward, because the concerns about Trump policies being overstimulative, inappropriately stimulative, inappropriately inflationary, into an already well-performing economy, then I think that is going to be a problem for equity markets. It's going to be a policy problem that the Trump administration is going to struggle to solve, because the back end, is, it doesn't necessarily dance the same tune as the front end, right? Where you can bully the Fed into keeping the front end tame, but the back end is going to do what it's going to do, and to a much greater degree. So that's really where we think the locus of risk is. If you want to hedge, your equity positions, I think it's a great, in my own opinion, it's a great place to look into that longer duration Treasuries, as a potential, use that as sort of a trigger, as sort of a risk, as a risk tell for where equities might go.
Okay, that makes sense. All right. Well, I think we're good on questions. I just wanted to thank you for your time. Thank everyone for joining us today. Really enjoy having Markets Policy Partners on here, and thank you, John and Brendan, for sharing your insights today. And it was I've always said the timing is always great with you guys. There's always, I feel like when we've had done the past,
crazy going on.
yeah, it's so when do we have scheduled to have you again? Oh yeah, probably right before the big vote. So should be pretty good again.
Yeah.
So,
when I sent the email a couple of weeks ago about what we talked about, I was like, we don't really have any insights on the election, and then everything changed.
Yeah, flash forward to the next call will be like Trump versus Trump versus Clooney.
yeah, you never know. Yeah,
could be anything. I mean, it's
we're waiting for Biden to have his hillbilly elegy moment. So
that's right. After North Korea invaded Oregon, it's all bets have been off.
If you look at here we are, July 18th. We do this again with you guys in October.
Who knows what crazy stuff is going
to be a lot of different stuff to talk about.
There's no question about it. All right. Well, thank you everybody for joining us. Thanks again, guys. We appreciate it. And we will let you know on our next call if we're going to be doing one in August. We'll reach out to you soon. I know we're getting into the doldrums of summer, and we may just decide to skip ahead to September, but we will reach out to everybody on that if we wind up doing one, and when the date is, and who will be joining us. All right. Thanks a lot.
Thanks
everyone. Have a great day.
Have a great
Thanks, guys. Bye-bye.